Okay. Okay, and we're live. Good morning, everyone, and welcome to another episode of the Crypto Hour. Today is Friday, the 23rd of August, and hopefully I might meet a few of you later in London for an AIW meetup. Sorry for those of you that are not in London or far away, but that's the way it is. Mark and Billy are in London, so we're taking the chance to have a meetup. Okay, let's get started straight away. As usual, let's go and have a look at the let me just share my screen maybe so you can see what I'm doing. Let's have a look at the economic calendar first, and then we'll have a look at a few more things. Okay. So this week, nothing major in the announcements that we've had. The thing has been dominated by people talking, and especially today we have the Jackson Hole Symposium, and everybody's waiting for Jerome Powell and the speech that will give at 3 p.m. To identify future trends. Already, things have already been said this week. They have kind of prepare the ground for a cut on interest rates in September, but it's probably going to be like only a quarter of a percentage point rather than the half percentage point that the market was expecting, as things are carrying on being quite good in the economic news. So they see no reason to do things too quickly. So this week we've had mainly inflation figures from Canada, again coming down a little bit faster than anticipated. A lot of manufacturing and services figure from Europe, from the pound, and also from the US. Sorry, from the US yesterday. And the other thing is the usual job figures on a Thursday in the US, which gave no surprises so far. So things have moved as normal, as expected. We also had the governor of the Bank of Japan again talking, and they are trying to massage the market in preparing for what they want to do. Whether they manage to do it or not, that's a different matter, but they are planning to raise interest rates in Japan after so many years of negative rates. They already have a little bit, but they've announced that they're going to do it slower than expected, not to spook the markets. And I mean, it's not going to be like a world-changing increases. As the expectations are that the interest rates will be raised from 0.25 to 0.5 by the end of 2025. So but the two things, obviously, the Japanese yen is what is being used as a funding currency for a lot of other things. So any change in a Japanese yen interest rates can have wide-ranging consequences. And also, the other thing that the Japanese yen has been used to is to people like borrowed funding yen and invested in dollars because it paid out much higher interest rates. And the other thing that we are going to face in the next few months, it's a lowering of interest in the US dollar. So that relationship between obviously yen and dollars will change with an adjustment then in the rate of dollar yen, and also in kind of flow of funds towards like kind of like risky assets. So today everybody's waiting for these this speech by Jerome Powell, and there are other speeches obviously at the Jackson Hole Symposium. This is it's an economic policy symposium, so there are participants from all around the world. Okay, mainly central banks, finance ministers, etc., academics, and other financial market participants. So there are quite a few things that come out of these events, and most of them are kind of like snippets here and there, and we can see the market reacting, quite fast to one announcement or another. But things can move quickly backwards and forwards. So there's slightly more volatility than usual in the markets during these events, because the politician may say things that the market wasn't expecting. Okay, moving on. Let me just have a very quick look at what we might have in store for next week. As you can see, not many red events, like inflation from Australia, consumer confidence in the US dollar, preliminary GDP, inflation in Europe. Nothing too major. So next week is mainly the main focus will be on the dollar side, this preliminary GDP, and also on next Friday the main measure of inflation that's used by the Fed to set interest rates, which is the PCE price index, and again that can push the market to expecting faster or slower interest rate cuts going forward. Okay. All right. Having said this, let's go into having a look at a couple more things. And this is the main thing, because it's kind of like a Bitcoin price hasn't done much recently. We've just been waiting. But the thing that's interesting to see, when I say the inventory on exchanges, the lower it is, the more bullish it is, in a way. Okay. But recently, obviously, we had a large influx of Bitcoin from Mt. Gox, from the US government, from the German government, etc., and that extra supply has been pretty much absorbed by the market. The good thing about it is that when you compare this with the Bitcoin price, as you can see, he hasn't derailed completely the Bitcoin price. Obviously, he has kind of like gone sideways to absorb these extra supply, but he hasn't crashed down, which is a very positive indicator. So much for future price moves. The other thing that's happened as well is that through this extra supply, there has been a kind of liquidations of what's called like paper Bitcoins being created. So Bitcoin in the not in the spot market, but in the futures and options markets, etc., etc. So that as well needs to be kind of rinsed, and Bitcoin price activity must become boring before it actually starts moving. Start moving fairly quickly, as we expect it to do in a bull market. So let's have a look at what Bitcoin. Let me just move a couple of things. Oh, by the way, for those of you, this is kind of like a nice example of supply and demand, and how price reacts when it hits a level of demand. So this is what you kind of like ideal trading conditions, where price just touches an area that you identified like a buying spot, and then quickly moves forward. That's beyond the point. It has nothing to do with Bitcoin, but this is gold. So let's have a look at Bitcoin. Go on to a daily chart. So nothing much has changed since last week. So this is Friday, 2, 3, 4, 5, 6, 7. This is last Friday. So we are slightly higher than we were last Friday. Nothing major from let's say 58, or well, it was about 59 where we closed last Friday, and we're now at 61. So again, we're still in this sideways move that we've been in since March. Okay, expected to still be here probably for another month and a half. But if we put things into perspective, when we look at the long term and we look at the monthly chart, so things change slightly, because we can see where you can see this thin red line, which is here. So where we have been all these weeks, and you can see the where the price has closed. So the lowest it has been is been, when I mean, price went down to 49,000, but every month the lowest it has closed has been 60,000. Since moving above the previous all-time high, the lowest close has been 60.5. Okay, so if you put into perspective, seeing where we come from, and maybe let me just look at another chart, this stamp that goes a lot further in time. Okay, so on this one we can see all the way down from 2012. So you can see this is the fact that we have held this particular this area which we struggled. So you can see in 2021, well, this was the highest point, but this was the highest close, which was at what? 57,000. So all this time since making that move, pretty much we have spent time in areas where we couldn't stay before. Okay, areas that represented the point where the market turned, and then the bear cycle, the bear market followed. Now we're very comfortable in that area now. Okay, so that's not me, you, or anybody. I'm talking about all generally the investing community in Bitcoin thinks that this price range at the moment is fair value. Okay, so there is been no panic, even when the price has gone lower, we always come back to this area between 57 and 70. And the fact that we are, if we measure this whole point from the low in 2022 to the top of the market, can you see that this area represents the sorry, wrong data. So if you can see here, this area that we are right now represents the top 23.6%. Okay, which is a Fibonacci. This is a Fibonacci levels. So it is a statistically significant level that traders look at. So that's maybe to make it easier, doing on the other side. So you can see that the lowest we have settled is being between this top range. So even just looking at this latest price move, from, I'd say, from when the market turned, we have for 1, 2, 3, 4, 5, 6 months held the top 20% of this move. Okay, now if you saw any chart that looks like this, you would be very happy if you're holding this kind of, if it was stocks or any type of investment asset, you will be very happy to see that, because it's you know, it means that there is general consensus that that this price is not a fluke, but is something that's here to stay. Okay, so then, you know, the usual discussion is, okay, when are we going then to have another leg that takes us further, and what could that leg mean in terms of size? And if I move this away, you know, I'll look at the latest. So the latest move is this one. Okay, so when the market paused, the market started growing again, paused, and then moved up. So if we apply this to, so without doing anything extravagant, apply that to this, to the latest pullback, can you see that now the expectation of Bitcoin to be at around the 100,000 level, it's kind of like par for the course. So it's not like wild predictions, but it's something that's happened in the last few months. So it's just a repetition of what has happened in the past, and it's very, you know, it's very likely to happen, and it's almost at the lowest end of the lowest end at the expectations. Obviously, the timing, you know, cannot be determined. We can't be sure how long it will take to, you know, to get up there. But you know, from the way I see it, this will just be the next leg. It wouldn't be, you know, it wouldn't be the bull market. It would be fairly, you know, for me, this is just like the first leg of the bull market. Then, you know, and then we'd see kind of probably a pullback, and then the real strength of the bull market will then start, you know, taking us well into the six figures, wherever the end of that run may be. But I can see this very well hinted at by the price movements. Now, the reason why we are then expected to, apart from, you know, looking at the past and saying, yes, this thing happened in 2020, we went from 10,000 to 70,000. You know, and the same thing in 2016, where we went from $700 to 20,000. So obviously you can't expect, you know, such big moves, but you know, for something to grow, you know, from 4,000 to 70, which is what, like 15, 16 times. If you think a more mature product might not multiply 15 times, and maybe this time it will be maybe, you know, 10 times, you know, from 15 to 150. Again, it's par for the course, and you know, a very reasonable expectation. Now, the reason why these things are happening is because there are all these moves behind the scenes that we see. Something like this now, like Sony launching its own blockchain. You know, that's part of using Ethereum layer 2 technology, so will be built on Optimism. But these are kind of like big names. So the big names, that, you know, what they have behind them is credibility from users. And Sony, obviously, it's not just a tech company, but it's also a gaming company. You know, the you know, the gaming is now a major part of its business. So it has, as a you know, a market, billions of people that use its technology, apart from, you know, phones as well, but mainly for gaming, televisions, and other things. So and behind that, obviously, they got the marketing power, you know, that generally the crypto companies do not have. So having names like this getting into the crypto arena is very significant for the credibility of the whole crypto movement, and for onboarding the next generation of crypto users, because we're still down at, you know, very low levels at the moment, around 5%, 5 to 10% of the world's population that uses that has at least some knowledge of crypto as users. You know, to move to, you know, 25, 30%, you need a big marketing machine to achieve that. And the big names like Sony, like there are and now also news that Apple is opening its payment systems on its phone to also enable direct crypto payments from your wallets. These are all like little steps, I would say big steps, some of them, that make the use of crypto more user friendly, and it'll then allow the next hundreds of millions of users to get onboarded into this sort of technology. Other couple of things, they are significant. First of all, there are people that know the trends and what's going on. Obviously, talking about crypto, Binance is one of these. The major crypto exchanges, in the largest by far in the world, it's hiring 1,000 new staff to expand the compliance team. Now, obviously, apart from the fact that Binance has been on a drive to comply with the worldwide regulation to become more accepted by in all sorts of different countries, but the fact that they are expanding so strongly, means they are expecting a wave of new users as well to come on board. And so start reading the signs, read the signs like this from the people that have got all the data literally, in their hands, and they can see which direction things are moving in, and they are backing this with putting their own cash to create infrastructure that then can cope with that sort of demand. And the other thing is, like, Sony was a commercial entity. This one is even kind of like more interesting. I don't know how many of you are familiar with the Asian Infrastructure Investment Bank, which is a huge development bank that has now created. It's a small issuance, only 300 million, but it's created a US-based debt on the blockchain. Okay, so it's not, we're not looking at the interest is paid, and that goes by the by. It's not really important. But the importance is to creating now bonds that are available on the blockchain that can be again transmitted and traded using blockchain technology. Now, again, bonds, for those of you that heard me speak before, are the largest market in the world in investment products. If we take that, and obviously these are still at the moment like test products, test transactions, but we probably will see a lot more of these issuance if there are no problems with the administration of the early products entering the blockchain. So again, why would that happen? Why would that happen, and why would this technology eventually replace SWIFT, another payment network? These decisions are not based on people being crypto evangelists or blockchain evangelists, but it's a simple business decision. Okay, because it works better, faster, and cheaper than what they're using at the moment. Okay, and it's a facility of them doing other thing with it, because then once the bonds are on the blockchain, what's the next step? The next step is fractionalization of the bonds. So where you might a bond buying a bond has got a certain barrier to entry, because you have to have a minimum investment to be able to buy one. Once you're on the blockchain, anybody can then acquire one and then split it in as many parts as they want, so that it's more available to people then don't have the funds maybe to go into it by themselves, but they would be happy to buy a strong product that offers a 4% return. Not everybody would want that product, but there are some people that would want it but don't have the financial capacity, either in the country or simply they don't have the money to invest in one of these products. So this is one of those things that probably if you look at the crypto news, you probably skip through that. You won't even paying attention to it, but it's one of the most important things that we have seen this week. There aren't that many crypto news to pay attention to, apart from if you're interested in Donald Trump launching its own a new crypto product or whatever it is. Just like honestly, the real decision that could make a huge difference to the blockchain world and the cryptocurrency world. This is definitely one of the most kind of hidden news that can have huge effects because because honestly, that would bring a liquidity to blockchain. If obviously there is a big difference between having one product and having all the products on the blockchain, but eventually, if this can prove to be a better system than other technology that are available, can you imagine the amount of liquidity that can enter then the blockchain world? Because we're talking about trillions and trillions of any sort of currency, dollar, yen, euros, pound, you name it. They are represented by bonds. So huge news, this one. Other things that we can have a look at as well. We can have a look at the as usual at the ETF effect on price and what the the recent flows. As you can see, the Bitcoin flows are they've been fairly on the positive side. Let me just go on the US dollar so that can make more sense, maybe. So nothing too major, but on 1, 2, 3, 4, 5, the last 6 days, 6, 7, 8, 9, 10. So we are at like 8 positive days and a couple of negative days. So the overall effect is positive, and we are now inching towards the 18 billion since the beginning of these ETFs. As you say, the BlackRock continues to get bigger. The Grayscale continue to get smaller. As you can see, it pretty much is almost like the only one that's got like red column without pause, where the others are mainly green with the odd red day. So the BlackRock is definitely now the biggest by far, and I can see that it's not going to take that long for Fidelity as well to catch up Grayscale. And the reason why I'm highlighting this, not because I like one over the other, but simply that the Grayscale one is where a lot of the selling pressures come from within the ETFs. So the smaller this becomes, that means the smaller the selling pressure as well becomes of coming from the ETF world of selling Bitcoin. And the similar thing is when we go to look at the Ethereum ETFs. Now the picture here is slightly different, okay? So as you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the last 10 days, 7 days have been negative and 3 have been positive. Let's say in US dollars, there's the much smaller amounts compared to the Bitcoin ETF. But again, when you see the effect, the red effect, where does this come from? Comes again from Grayscale. Not because Grayscale is a bad company, but because so they converted a trust that was already existing before they launched the ETFs. Okay, and because their trust had, as I told you before, a lot of barriers to exit. So you had to sell if you wanted to get out and get your money back. You had to sell below market value. So a lot of people did the same with Bitcoin. They just held on to these until such time as it was possible to cash out at the higher price. And again, since the conversion to an ETF, there is no barrier to exit anymore. So obviously, a lot of these funds have then found their way onto some of the others, the other ETF, Ethereum ETFs, and some of them have been just fairly, cashed out. So can you see here, they got 2.5 billion, of negative volume, and all the other ones are positive. Okay, the effect though, the total effect is still negative. So at the moment, since the launch of the ETFs, we still had an outflow of 459 million Ethereum. Okay, so the overall effect is still negative, although if you look at this chart here on the right, can you see now where a lot of the selling pressure was in the early days? Okay, and this is only been 23rd, so today is a month. It's a month this has been launched, so it's still very early days. But you can see that the selling pressure was mainly in the first couple of weeks, and how although we still have selling pressure here, it's a lot smaller and it's getting smaller. You know, pretty much as an average, we can draw a line here. We can say, oh, this is getting smaller. So again, going forward, the important thing to realize is that now the ETFs are allowed, again, Ethereum to become an institutional level product. Obviously not as attractive as Bitcoin because it's got much bigger clout, but still, it can attract a lot of investors that wouldn't have touched cryptocurrency without it being an institutional product. And this is not just, I'm not just talking about private users, but I'm talking about investment funds, institutions that by statute couldn't have invested in cryptocurrencies before the ETF were launched. So we still, again, a matter of wait and see, waiting for these flows to start becoming, green again and be consistently green on a green basis. And then that's when you will see a push up on the Ethereum price, which moment we can have a look. This is monthly, going to daily. So let me show you when the ETFs were launched, okay? There we are, 23rd of July. Oops. Okay, so that's the date of the launch. Can you see the effect hasn't been good? Okay, but it's over the past 3 weeks. Then we hit this bottom, which coincidentally, it was pretty much at this previous level of demand. Okay, and so before this big increase in price from 224 to 4,000, and since then it's bounced from there and kept to still towards the bottom of this range, but now start to make its way back up. At the moment, I would expect, I mean, that's my expectation, is to make its way until we find kind of selling pressure will probably come to around the 3,000 level. But for me, from now, between 2.6 and 3,000, there isn't too much here to fear. So unless there is a out of crypto event that causes again a market crash and push the prices a lot lower, I would expect the next big price level to hit will be the 3,000. So for me, the 3,000 is more likely than hitting the 2,000 from where we are right now. Okay, so I think I've said what I wanted to show you for today. What did I have here? Elon Musk. What's Elon Musk? Oh no, it's okay. Bit of rubbish. Okay, so I've shown you what I want to show you for today. So let's see. We got about 10 minutes for questions. Let's see what your burning crypto questions are. Don't talk all at once. Eric, come on, you're always reliable with your questions.
Morning, Luca. Luca, you were talking about the Soneum, the Sony coins. Where will they be launched, and when and where will they be launched? Do you know that?
Let's have a look at the. Let me see the article. Let me see if it says the date. No, not quite sure. It doesn't say exactly which. It says Sonium blockchain launch in July. So they posted in July, but it doesn't say exactly. Doesn't say exactly what date. But it will be launched on Optimism.
Optimism.
Yeah. But if you can, if you can keep, you can do a search on Sony News, on CryptoPanic, if you're interested, and when obviously it will be announced a little while before. I think I expect a couple of weeks before at least. But it's not so much the idea of this. It wasn't just rush to buy whatever coin they have on there. They will
No, I was working at Sony for 20 years. That's why it was interesting.
Okay, so
Thank
just
you.
bear in mind whatever the idea would be. Just do a little bit of research first. Don't just like jump in feet first. Okay. All right.
Luca, morning. Just a question. What's the reason, or is there much information behind why Grayscale is selling and continuously selling?
Yeah, simply because they got for two reasons. One, they got the highest fees. Okay, so it sounds reasonable that if you want to be an investor in either Bitcoin or Ethereum, you would choose a product that's got good volume, but at the same time it's got low fees. There is one product that charges you 1.5% and one that charges you 0.2%. It's logic that you would move from the expensive product to the cheaper one. And the other reason is that these Grayscale trusts existed for a number of years before the launch of the ETF. Okay, so they already had a big amount of investors in Bitcoin and Ethereum that couldn't get out. I mean, they could get out, but at a very expensive price. Okay, so they would have had before the launch of ETFs to sell their shares at a discount. Okay, since the ETFs were launched now, there is no barrier to exit. So even people that don't want to reinvest in another fund, but simply they want to cash out, they can do it for free now, pretty much, instead of losing 10-15% of their investment. So those are the two reasons why Grayscale Trust and now Grayscale ETFs are seeing outflows, and they since also launched a different ETF which has low fees. Okay, so people again are moving from the high fee to the low fee product as well.
Thank you.
Okay, no problem. Any other questions? There is an ongoing discussion, in the US about the two parties' friendliness towards crypto. I don't know if you've been following that. One of the latest one to stick his ideas in is the Charles Hoskinson, the Cardano founder. There is questioning the Democrats' friendliness towards crypto, and they're saying basically come up with the goods because at the moment nothing actually. The Democrats' treatment of the whole crypto sector during the last 4 years has been pretty abysmal. So I will say that if Kamala Harris doesn't come out with some meaningful policies rather than just lip service, that could get her to pretty much lose a big chunk of the single issue voters. They are crypto friendly, so that could actually be an extra push for crypto if eventually the Democrats come out and put forward policies that are, that make sense to crypto players as well, which at the moment they haven't done. Okay, so keep an eye on that as well, because until the US elections, it's probably the best time to get some concessions from politicians. So anything that would come, especially from the Democrats, might be meaningful, because they might be forced to promise things, especially if the polls. I mean, I know I'm cynical, but especially if the polls are very close, and where a handful of or tens of thousands of votes may make the difference between winning the election or losing the election. I think that some pronunciation about crypto would probably come forward. Okay. Anybody else? We've got 2 minutes left. Okay.
Luca,
Good.
I can add something quickly, maybe not a question, just a comment, but some news that seems to have been coming out of South Africa. I don't know who's from South Africa on this group, but it seems that there's legislation that SARS, our tax collection service, is pushing against people taking crypto and putting it into cold storage, because it's seen as an international transaction, and they're actually wanting to block that. They actually only want you to keep your crypto on a licensed exchange. So the big crypto exchanges in the country, and there's 3 of them, are busy in conversation with SARS and the South African Reserve Bank to not go this route. They're saying it's going to very much hurt the crypto industry. But I just thought I'd share that with you.
Yeah, that'd be kind of a really silly thing to do, to be honest with you, because there is no way that you can block that. Yes, they can stop they can stop the crypto exchanges, from doing certain things, or maybe tax their transactions, but the only thing that would create is a kind of like a black market where you go and find people that and pay them to then get Bitcoin transferred from cold wallet to cold wallet. I don't know how you can stop that. And before the regulation came in place, you can see a lot of crypto leaving crypto exchanges and moving to cold storage anyway. I mean, how do you police that after that? I mean, it just doesn't make sense. Doesn't make sense, because we are moving. For me, kind of the idea, and this is why this technology will eventually conquer. I'm not saying the world, but the financial world is because we're moving towards a world without barriers, without borders, and having to put like artificial borders in place, even digitally, it just doesn't make sense. So I'm more like with the new innovations. So you look at the things that El Salvador are doing. I think I'm more with that way of thinking than trying to keep everything in place. And if you look at history, the biggest empires always failed once they started looking at defending rather than attacking. And that's the way I see it. So they're trying to stop people from doing stuff instead of being proactive and see how they can use it to help people out. Yeah. So yeah, good luck to the South African regulator. I don't see personally as a way forward. I don't know if we'll go forward or not, but I think they will probably see sense after a while, because it will cause them more problems than benefits to actually put something like that in place. And Chad, you need to use some I think some Miracle Grow something on your plant. It looks quite sad behind you.
Spring is upon us. I'm hoping it's going to go crazy. It's a bit stickish right now.
It does, yeah, it does. Maybe stick some leaves on it or something.
Maybe I should talk to my plant.
Definitely. Okay, gentlemen. So I will
Thanks, Luca.
You're welcome. We'll finish the call here, and for all of you that from ProAW, we'll see you again in about 15 minutes on the other Zoom call. So just time to go and get a fresh brew. And Jonathan, I was thinking, why don't we put another day in the diary as well for an extra Cardano session? I think would be interesting. Maybe I'm quite busy this week, so maybe in a couple of weeks' time, if you're okay.
Yeah, maybe 3 weeks, because I've got a week away as well.
3 weeks, okay. So 23rd, 30th, around the 14th. I know that day. I don't know what the date is exactly, but yeah. Okay. So before then, when we can have a chat and see what we can show them. We do a live session like last one, but not this time. Maybe not on DeFi, but on other things. So we'll move into the more complicated stuff.
Yeah.
Yeah. All right.
Good.
Okay, guys. Have a great weekend if I don't see you. And for those of you that will follow me, I will see you again in 10 minutes. Okay.
Thanks very much.
Bye-bye.
Thank you, Luca.
Thank you.